Good morning, good afternoon, good evening to all of you, wherever you are. Actually, we know where you are. You are back at home, wherever your home is. This is Pascal Saint-Amand. I'm the head of the Center for Tax Policy and Administration, and I'm glad to welcome you to this 15th edition of Tax Talks, quite a special one as we are zooming like the rest of the world, given the COVID crisis. You know that the situation in France is still pretty bad. We're still in lockdown until the end of the week, and the team is dispatched across the world, but is joining today for these tax talks. The idea will be to brief you on the state of play, but maybe some housekeeping points first with Hazel. Hazel.
Thank you very much, Pascal. So just some housekeeping before we get started. The chat function will not be operational today. This is for security reasons. If you do have questions, you are invited to submit them using the Q&A function at the bottom of your screen. These will be moderated and we will do our best to address them in the Q&A session at the end of the presentation. As usual, we are recording this webinar and we will share the replay as soon as it is ready. You are also invited to join the conversation on social media using the hashtag OECD Tax Talks. Back to you, Pascal.
Thank you, Hazel. So, as an introduction, let me first present the panel members of today. We will be joined by Arim Pros, who you all know well. He will be talking about tax administration, Action 13, Action 14, the BEPS action plan, digital work. Bert Brees, who is not that familiar with the tax talks, but Bert is the man behind the database on the COVID-19 measures. Sarah Pierrette and Kurt van der Den both have been drafting the report on tax policy we presented to the G20 a few weeks ago. You know Sophie Châtel, the head of tax treaty team and unit, and she will also describe what we've done on COVID and tax treaties. Zaida Manata joined the Global Forum a few months ago now. She has replaced Monica Batia. If Monica is listening to us, hello, Monica. And Zaida is in charge of the Global Forum and will present the work on transparency and the Global Forum. And finally, we have Ben Dickinson, who is the head of the division in charge of the relationship with developing countries. I would like to thank them all for joining that call. The next slide, please. The topics of the day, three categories. First one is CTPA's COVID-19 related work. Then we'll try to explain the continuity of the work program in different areas, one of them being digital, because we know that there are many questions rising on this issue. And finally, we should have some time for the Q&A. We may go beyond 60 minutes as we have a lot to say today, but we'll try to preserve 10 minutes for the Q&A at least. If we move before getting to the specific tax related issues, I would just like to highlight that the OECD has organized to provide a consistent and comprehensive response to the challenges arising from this crisis. So tackling coronavirus, contributing to a global effort. You can see the details and including the hub, which has been put in place by the Secretary General and his team. It's quite widely consulted, and there are many other contributions, including the tax contributions, but not only. And please do not hesitate to go there and consult. The CTP response to COVID, because as soon as the crisis hit the world, we started working on that. So you can see the different contributions on the screen. The first overview of targeted tax policy measures that you can find on the hub, and that's the work of Bert. I mean, when I say Bert and the team and all the members who have contributed to feed us with their measures, then we had at the end of March a quick response from the Forum on Tax Administration, publishing actions that tax administrations were currently taking, and this has been combined in the database of BERT. Then we issued recommendations on cross-border workers and other related cross-border matters from a tax treaty perspective. The Forum on Tax Administration published a report, advice on business continuity, and mid-April we presented this report to the G20, and you will see that there are a number of other work streams that have started. If we move on to the next slide, I will turn to Arim for him to quickly present the work which has been done by the Forum on Tax Administration under the leadership of Hans Christian Holter, the chair, and the team. Arim, over to you.
Thank you, Pascal. I hope I am unmuted. That would make my intervention a lot more interesting, or no, maybe not. I will take you through just briefly and very quickly, in light of the many topics that we want to cover, about some of the things we've been doing in the tax administration space. We've come out, we have the Forum on Tax Administration. We also have other working parties that work on tax administration issues, but it's led by the Forum on Tax Administration, which, as you know, brings together the OECD, but also the G20 countries. It's a wider group of tax administrations to come together at the level of the commissioner, and so we can move things. And so in one of the first things we did, we look at what tax administrations can do to support taxpayers in a time of crisis where quick action is necessary, and the first port of call very often is tax administration. Sometimes policy takes longer, maybe not necessarily the case, we're moving quickly, but here we've looked at different measures that tax administrations can take. Also importantly, we've done this together with other tax administration organizations, and you see not just our logo, IOTA, SIA, so very happy and very pleased that we were able to work together across different tax administration organizations, trying to get the ideas out, what it is that tax administrations can do to support taxpayers. So there's a number of measures the tax administration have taken, the pros, the cons, the ideas for individual taxpayers, focusing on preventing hardship and reducing burdens, as we say here. There's measures for businesses with a particular focus on helping to alleviate cash flow issues and how do you address those. And there's a reference document on the types of things that can be done and some of the implications as we think through which measures might make sense in the context of which country. If I could have the next slide, that gives you a bit of a breakdown of the different types of measures you've seen. I'm not going to go through all of these different measures, but of course, those are all measures that a number of tax administrations have taken that make sense to do in the context of the current crisis, and the mix of these measures and the particular targeting of the measures, of course, depends on the particular circumstances, the timeline, the aspects, the context. And of course, they have knock-ons, just to come out with some examples. If one thinks about extension of timing for particular returns, one also needs to reflect that some of them are tied to the calculation of benefits payments, and then there are knock-on effects that one needs to think through as one moves into those different measures. Fraud prevention is another consideration. And of course, what does one do with providing benefits to individuals that may not be digitally enabled, and how do we get those out to those people that need them, that may still have limited access to digital means. So that's one type of thing we did. If we move on to the next slide, that's more looking in the tax administration on the inside, business continuity considerations, in some sense somewhat similar to what businesses have to do. How do you keep the lights on? How do you do this? You are providing an essential service, sometimes tax, sometimes also management of benefits. So it is an essential service. How do you do that? How do you focus? What are the key areas you need to think through? And we've tried to sort of tease them out. Again, having worked through this with the membership of the FTA, but also more widely IOTA SIA. So if we can get to the next slide. These are some of the things that you'll find in the reference document as tax administration are thinking through of how they continue to engage with their taxpayers, do so safely, provide services that taxpayers need, how they deal with their staff and do that safely, and what other arrangements they need to think through so they continue to be efficient and serve the community in these difficult times. So that's, I think, the second part, which I think concludes my tax administration.
Thank you, Arim, and we'll move to the tax policy responses. And the first of the responses was to put in place a database I will turn to Bert for him to explain how it works so that you can all go and consult if it's not already done. Bert.
Thank you very much, Pascal. So as part of our country tax policy work, we have created a database that contains information on tax policy measures that countries have implemented in response to the COVID-19 crisis. Now, in addition to the tax policy measures, the database contains additional information, including some measures that have an impact on the tax liabilities, such as tax deferrals and waivers. We also include information on benefits and changes in benefit entitlements, as well as measures that governments have implemented to support the costs that businesses or households face. Now, the aim of the table is multiple. First, we want to inform countries of the measures that are implemented in other countries. We have been able to identify trends in the types of measures that have been implemented, and we use the information to formulate country tax policy advice. So currently the table includes the measures, the short-term responses that countries have taken in response to the crisis. But we are planning to continue this work during the exit phase, and then also keeping account of the measures that countries are taking as part of a fiscal consolidation effort. The table gets regularly updated or sent to Inclusive Framework members, and it's also publicly available on our website, as you see in the link. Now, as you can see, the table is in an Excel format. This is just a screenshot of part of the table. So it includes detailed information on the description of the measure, as well as information on when the measure was announced, when it took effect, and when it will be repealed. In addition, we provide information on the type of tax that the measure refers to, on whether the measure aims at strengthening business cash flow or household cash flow, and so on. So we're using different labels to classify and bring a bit of structure in all of this information. So because we use these labels, it allows you also very easily to search for the type of information you are mostly interested in. For the moment, we have over 100 countries, and as we have each measure on a row in the Excel file, we have over 900 rows in the table. So I said we upload this table regularly, and the most recent table has been uploaded earlier this morning, and we plan to continue doing this over the weeks and months to come.
Thanks a lot, Bert, and thanks a lot for this work, which we have heard many good things about from both member countries, governments, as well as practitioners, academics, and we'll keep this table updated on the way forward. So thanks a lot, Bert. Now, once we have data, the bold facts, we can start making analysis. And the G20 chair, the finance minister of Saudi Arabia, Mr. Al-Chadan, asked us to prepare a report to the G20 finance ministers who met a couple of weeks ago. And I will turn to Sarah to present some of the findings and analysis on this report. She will be followed by Kurt, and I will just say a few words of conclusion on this section. Sarah, over to you.
Yes, thank you very much, Pascal. So the purpose of our report for the G20 was twofold. So one was to take stocks of the emergency responses that have been implemented by countries so far. And this is based on the database that Bert just presented. And the second objective was a more forward-looking exercise where we try to identify how tax policy can help as the crisis continues, and then as economies progressively start recovering. And so you see that the subtitle of our report is Strengthening Confidence and Resilience, because these are indeed two key objectives going forward. Now, if we look at the next slide, this slide shows the approach that we follow in our report. And so what we do is we identify different phases of policy response depending on how the health and the economic situations evolve. So we have a first immediate response that immediately follows the virus outbreak. Then we have a second phase when countries start introducing containment and confinement measures, and when the focus of fiscal policy should be on mitigating the economic and the social impact of these containment measures. As we transition out of the crisis, the policy focus should be on supporting economic recovery. And then we get to the final phase, the post-pandemic, post-crisis phase, where restoring public finances and achieving debt sustainability become priorities. So in each of these stages, the key tax policy and broader fiscal tools that are required to address the situation change. And so our report is structured along these different phases. But it's important to note that we don't expect that this is necessarily going to be a linear process. There might be overlap between these different phases. And in fact, that's what we're seeing today with the containment measures not being removed all at once, but being progressively phased out, which is actually making policy responses more complicated. So next slide. Following this sequenced approach, I'm going to start with the emergency measures that have been implemented by countries, so the stock-taking exercise I was talking about. And this graph looks at the policy packages that have been introduced in a number of OECD countries as a share of GDP. And you can see really throughout strong reactions by countries, and in many cases, unprecedented government action. And this is, by the way, an observation that we make beyond the countries that are shown on this slide. We also see variations in policy mixes with loan guarantees, tax deferrals, tax cuts, transfers, and all of these have different implications on public budgets. Another important point that you can't see from the graphs here is that we've observed that many countries have followed a gradual approach where they progressively expand the size of their fiscal packages as the crisis unfolds. So next slide. So this slide provides an overview of the key types of fiscal measures that have been introduced as emergency responses by countries. The most frequent type of measure by far, whether it's among OECD and G20 countries or among developing countries, have been measures to ease business cash flow pressures, in particular through tax payment deferrals. Another common type of measure has been job retention schemes, so where the government typically will cover a big share of businesses' wage bills to allow them to keep their workers in employment. Income support for households has also been a major priority, generally provided through direct cash benefits rather than through the tax system to be as efficient as possible. The expansion of sick pay, leave, and unemployment benefits in particular to non-standard workers has also been common. And then there are a number of countries that have targeted specifically measures to support the healthcare sector's response to the coronavirus. For instance, with the temporary removal of import duties on medicines and medical equipment. So this was just a brief overview of these emergency responses, and now I'll let Kurt talk about how tax and fiscal measures can be adapted as we move on to the next phases.
Thank you very much, Sarah. And if we can go to the next slide. So indeed, Sarah and Bert talked about tax and fiscal policy in the immediate aftermath of the health shock. What the G20 report ambitiously also tries to do is to provide some forward-looking perspective, and I'll be saying a couple of words about that. So what is the role of tax policy during extended containment and gradual relaxation of containment? What is the role of tax policy once the pandemic subsides, and what can tax policy contribute once the economy has recovered? If we can go to the next slide, please. No, sorry, the previous one once more. So continued support in containment phases. As Sarah already indicated, a lot of countries are now starting deconfinement, are gradually relaxing containment measures. We see this as a very complex process. We see that it's gradual, that it's partial, that there's going to be a lot of learning by doing. So there's a very real economic risk here that there's going to be a persistent drag on the economy. And the question that we ask in the G20 report is what does this mean for tax policy? What it means for tax policy on a very high level is that we should stick to the main objective. The main objective is to provide support, to limit hardship for households and businesses, and to make sure that once recovery becomes possible, that is as smooth and strong as possible. So the objective doesn't change, but tax policy should adapt to changing risks. As containment continues, the economic problems may become more severe. Liquidity risk is present right from the start, but increasingly we may also be confronted with solvency risks. So businesses or even households becoming at risk of bankruptcy. So what can we do tax policy-wise to mitigate these risks? There's a detailed discussion in the report, and I'll just mention here some of the options which you can look at in the report itself. Extended tax deferrals, these are equivalent to interest-free loans, so these can work well. Loss carrybacks are very helpful to support cash flow, and they're counter-cyclical. They target loss-making firms, so they're an appealing instrument in the current context. We can think of looking at tax measures that help firms keep inventories, so reduce the risk to disruptions of supply chains. We can increasingly start looking not at just deferrals, but also reductions or exemptions from some types of taxes, for example, including property taxes. VAT has an important role to play during containment phases because it's a high frequency tax. And so accelerating refunds, for example, is an important tool to support liquidity in businesses, and therefore should be looked at very carefully. Should be looked at very carefully also with compliance risk in mind, because earlier crises have shown that these kinds of mechanisms can be very helpful, but come with increased compliance. So these are some of the things that we can look at tax policy-wise. At the same time, income support remains important for households. This is, of course, not just a tax policy issue, but also a tax policy issue to some extent. And we see that these kinds of measures of income support could very usefully be extended to non-standard workers. If we go to the next slide will show that ultimately the pandemic will subside, and then we can start looking at economic recovery. Economic recovery is not going to be automatic. So we see a prolonged period of containment. We see increasing risks indeed also of solvency. So we cannot really assume that the economy is going to rebound all by itself with no policy support. There is a strong case for policy support to avoid what could be called an L-shaped recovery. An L-shaped recovery is, of course, a euphemism for a prolonged economic slump. Policy will be needed to avoid this. Policy can take the form of stimulus, of expansionary fiscal policy. This should be demand-oriented, demand from households and businesses, consumption and investment demand. It should be targeted both with inclusiveness criterions in mind, but also to maximize multiplier effects. So provide support there where the guarantee that it will result in increased demand rather than increased savings is the largest. As was indicated before, decontainment is going to be gradual. So we will at the same time have stimulus policies and containment policies. And a policy challenge will be to make sure that we stimulate one part of the economy, whereas other sectors remain in containment. That's going to be quite difficult to seek these synergies, but it's going to be important to try to find them. We have seen in earlier crises that recovery efforts, fiscal stimulus in general, works better when it's coordinated among countries. This will be very important in this particular instance as well, because fiscal space differs between countries. The ability to stimulate differs between countries. Therefore, if there is a joint effort, the global payoff will be larger. And there is mention in this context of a global Marshall Plan. We have a fully interconnected global economy. We have a heightened sense of solidarity. So there could be space and a very useful application of something like a Marshall Plan on a global scale at this juncture. There's also a lot of discussion of how stimulus could be connected to longer term policy objectives, which relate to what broadly could be called resilience, so health resilience. We're all fully aware at this point that the resilience of our economies to health risks can be improved. We know that this relates also to global value chains, which seem to be quite vulnerable to the types of shocks that we're living through. We also are still aware of climate risks and other environmental risks like biodiversity risks. Can we combine fiscal stimulus efforts with, which of course focus on short-run recovery, can we combine them with these longer-term objectives? We're looking for ways to do that. It's challenging, but it should be possible. If we go to the next slide, ultimately, when the economy has recovered, we will need to think about restoring public finances. We are spending more, we should be spending more, revenues will decline, so debt will increase. How to close the gap? There's a role for monetary policy, there's a role for fiscal policy. There is therefore, of course, also a role for tax policy in this context. Now, tax policy, we're not immediately thinking about fiscal consolidation, but we should open the debate now. We should start preparing for tax policy reform now. And this debate is broad. There is, for example, reference to exceptional measures given the exceptional circumstances, solidarity levels, super profit taxes, introducing stronger progressivity in the tax system, as has been seen in post-war episodes before. These things are on the table and could be discussed usefully. We could also talk, maybe in a different light, about things that already were under discussion, which relate to carbon taxation as a source of revenue and as a way to help us move towards decarbonization of the economy. We could talk about base broadening, which has been part of the tax policy debate before the crisis and maybe can take increased importance at this juncture. These are some domestic options with, of course, international repercussions, but I will hand over to Pascal to talk more about the international dimension of this tax policy debate.
Thank you, Kurt. And you can see that this is quite a vivid debate that is taking place on the future of tax policy. And we need to anticipate the next steps, even though I think Kurt said it clearly, the recommendation of the OECD is not to rush to fiscal consolidation. Let's not duplicate the mistakes which were made in the post-global financial crisis in 2009, 10, 11, where governments too quickly tried to do fiscal consolidation. Not our advice, but still we need to start reflecting on what the crisis will have in terms of impact on the long-term tax policy mix. And these are some elements of reflection that have been spelled out in the report, as well as on the international tax agenda, some reflections that you can find in the section 5 of this report. One on developing countries. Some talked about a Marshall Plan for developing countries. I think the Secretary General of the OECD did so too. And the OECD knows what it talks about when talking about the Marshall Plan, as it gave us birth some decades ago. What we are saying here, and I think that's a common view shared by the IMF, the World Bank, the UN. We had last week a call of the Platform for Collaboration on Tax, and we all agreed that whatever debt relief is provided, whatever aid is provided in cash, we should not lose sight of the domestic resource mobilization agenda. Tax will be absolutely key in the long term for the development of countries. And therefore, if there is something like a Marshall Plan or equivalent, there should be a tax dimension in there. As regards the impact on the international agenda, what we can see from conversations with the governments, with stakeholders, businesses, civil society, academics, is that there is an even increased need to reach agreement on how to address the tax challenges of the digitalization of the economy. And we can see some DSTs blossoming here and there. So having a common approach would probably avoid trade disputes, and I think that trade disputes in the pretty gloomy environment would not do good. A bit the same on Pillar 2, a renewed impetus on Pillar 2 we can see from at least a large number of countries saying if we buy out significant parts of the economy with taxpayers' money, we will have zero tolerance for these companies in the future to benefit low taxation by delocating part of their profits to low tax jurisdictions. As a result, we can see renewed appetite from a number of countries on Pillar 2. Doesn't mean consensus. There are still countries which have different views, but we can sense this. All that to say that keeping tax cooperation at a time where we can see some countries have some doubts on multilateralism or would like to go back to unilateral measures, that would not do much good to the world economy. And we can see that in the dynamic of the work of the inclusive framework, with a lot of engagement in spite of the difficulties to communicate or to exchange. Next slide will drive us to the quick responses we try to provide. Arim described tax administration response. Sophie will quickly describe what has been made available on our website. We have more than 25,000 views on the piece that Sophie contributed to. So Sophie, over to you.
Thank you, Pascal. Yes, hello, everyone. Let me cover the main concern that were raised by countries and by many of you with respect to the impact of the COVID-19 crisis and tax treaties. Well, we are, as Pascal mentioned, many of us have created a little office space where we carry on our activities, and this creates a lot of questions on cross-border application of treaty concepts. So I'll go through 4 main areas of concern with you today, but for more detailed information, Pascal mentioned that earlier, but we have issued a guidance where you'll find more information, and it's available on our website. If we go to the next slide, we see that the first area of concern revolve around the concept of permanent establishment. So as I said, we now have a little space at our home and we carry on our employment. Well, will this home office will create a permanent establishment for our employers and employers in general? The answer here is no. It should not create such an exceptional and temporary change of the location where the employee is carrying on his employment should not trigger a new permanent establishment for the employer. Now, similarly, if an agent started to conclude contracts for the principal from his or her home office, will that create a permanent establishment for the principal? Again, here the answer is no. A temporary conclusion of such contract should not trigger a permanent establishment for the employer. There were questions about the construction site, and we have commentary that cover those temporary interruption of the work that is carried on at the construction site, and the guidance we provide rely on those commentary. If we go to the next slide, we see that there were additional area of concern for the concept of residence. First, a company, if we have senior officer that are now taking decision from their home offices, will that trigger a change of residence of a company? Again, here the answer is no, it should not. If it's temporary and exceptional, those changes will not trigger a change of residence for the company. For individual, for example, an individual is now find himself or herself in a foreign jurisdiction in the time of confinement away from his normal place of residence, perhaps continue to work for an employer remotely. Will that trigger a change of residence? Again, under the treaty, the answer is no, it should not. The concept of residence under treaty and the tiebreaker rule really look at the normal period and will look at factors such as central vital interest. The more complicated issue relates to cross-border workers. An employee that normally every day, every week would cross the border and to work in a different country. But now with the COVID-19, that employee is continuing to work, but from his or her home. Now, what will be the impact of this? And it depends very much on the treaty applicable, because a lot of treaties actually have special provision on cross-border workers. But it also depends on what is the employment income that he or she receives. For example, many governments have stepped into to help employers with some stimulus package, help employers to keep their employees on the payroll. And that income will actually be taxed where the employment used to be exercised. But other employment income would normally be taxed where the employment is performed. And the OECD is working with countries to mitigate the compliance burden for both the employee and the employer, as Akim mentioned earlier. In a nutshell, that was the analysis of the treaty and the impact of the COVID. And again, for more information, we invite you to consult our website.
Thank you very much, Sophie. And there are a few questions on your work that we may, after the session, pass on to Sophie so that she can respond directly to you. I just wanted to add one point, which is not tax treaty, but about transfer pricing, as we have received a number of requests that we can show in the next slide. So transfer pricing and COVID, here are a few questions received. Novel transfer pricing issues for taxpayers and tax administrations. So an example, what happens when you're having a low risk distributor in a number of countries, and now you are going to run into massive losses, and your country of residence may not be that keen on seeing you keeping some profits abroad in the low-risk distributor. A number of companies have approached us raising these questions. Just one example out of many, and among the many questions we have received online right now, we can see that there are questions related to this issue. So we did receive the questions, and we encourage you to reach out, let us know what your concerns is, so that we have our database of questions at least. And this is being looked at by Working Party 6, which has started a discussion on how to handle and when to handle. And here we need to recognize that there is a conflict because companies would like responses before the summer, for some of them before June, when they will feel their return, while the members say we need time to explore these and to agree. Unlike what was done by Sophie and her team on tax treaties, because we had very clear interpretation of tax treaties, and the Secretariat could come out on its own to provide guidance to the members on transfer pricing. It is not the case, and if we want to do something meaningful and even more importantly useful to you all, to limit the exposure to tax uncertainty, we need consensus among the members. It will be meaningful only if this is work carried out by Working Party 6, and this is what we are currently doing, elaborating a process where the members will be comfortable. That means that we will probably not deliver before year-end, but we'll try to go as fast as possible. And when we do that, we will be consulting. On the next slide, please. Received requests, as I indicated, and you have here the address that you can use to send us your request. The slides will be available to you after the presentation, so don't rush taking this address, even though you should know it by heart, shouldn't you? Next slide. We'll move to the continuity of other work. So we're done with the immediate reaction to COVID. But beyond COVID, there is hopefully life, and we have a pretty heavy program of work, which is impacted by COVID, sometimes delayed, sometimes not, and we would like to drive you through this. Next slide, please. And that's where I will turn to Zaida. And again, I'm glad to introduce Zaida to you all. We are now being followed by 1,104 people in the audience. So Zaida, your turn. And again, very happy to have Zaida having joined the team. Zaida in a previous life was the Brazilian delegate into the BEPS negotiation, but now she's in charge of the transparency agenda. So Zaida, up to you.
Thank you, Pascal. Good afternoon, everyone. The Global Forum is responsible for assessing two standards on transparency: the automatic exchange of financial account information and the exchange of information on request. On the automatic exchange of financial account information, I must start by saying that the CRS exchange deadline was extended to the end of December 2020 to respond to the challenges faced by tax administrations and financial institutions all over the world. However, jurisdictions that are in a position to do so are encouraged to exchange earlier. On the assessment of the legal frameworks of the jurisdictions, I'm happy to say that we are continuing the work as planned, and by the end of the year, we should deliver the determinations and conclude the legal assessment of 100 jurisdictions. On exchange of information on request, we are carrying on the round 2 assessments, and we have already assessed 69 jurisdictions, including 8 reports that were released in April. The work is carried on, and during summer, we should release the 9 reports. However, the on-site visits for the work that was underway was postponed until the visits and the travels can be resumed. The launch of new reviews is under discussion and by the Global Forum, and the proposal is that they will be postponed by 6 months. We will assess the situation as the COVID crisis evolve and see whether new adjustments are needed. Please, the next one. Okay. The Global Forum is also responsible for assisting jurisdictions, and in this context, we have set up an environment where good practice and tips on exchange of information is available for competent authorities, and we are also facilitating notifications between competent authorities on the impact of the COVID-19 on their work. We are promoting e-learning opportunities. In April, we had 600 participants in virtual classes on beneficial ownership and exchange of information on request from more than 80 jurisdictions. We have now new e-learning modules being developed, and they will be released soon. They are expected to be available in French, English, and Spanish. We are also working on new toolkits on the multilateral convention, on the setup of exchange of information unit, on confidentiality, and on automatic exchange of information. The Global Forum continues carry on the technical assistance program to developing countries. Now we are providing assistance remotely to 62 jurisdictions all over the world, as you can see in this map. And this assistance covers legislative reforms, the setup of exchange of information units, the signing of the multilateral convention, and so on. And in June, we will launch the 2020 Tax Transparency Report in Africa. This was scheduled to be launched in March during the African Union Commission meeting, but due to the COVID crisis, it was postponed, and now we're going to have a virtual launch of this report in June. On the next steps, Achim will brief you on the work carried on by Working Party 10. Achim?
Thank you, Zaida. Yes, I'll be quick, just to give you a sense of what else we're doing at the OECD here on tax transparency. And here, picking up 2 things on the first slide, I'll talk about what we do in the sharing and the gig economy. This is the platforms, and here it's about how you work with the platforms and integrate the platforms into a compliance model. But this isn't just about tax compliance, it's also making life easier for platforms that are faced with different reporting obligations in different jurisdictions as they expand. And so trying to find a sensible middle ground that recognizes the rapid growth of digital platforms, that recognizes a shift from traditional employment towards independent work, hence the sort of gig economy. It sees the benefits of working together in this space, the benefit for tax administration, the benefit for taxpayers, easier form of compliance, and we're trialing with what sort of technology could be built into the onboarding process to make this easier, and also benefits for the platforms themselves that have an easier time in growing their businesses and in expanding. And so that's, I think, the philosophy and the driver here. So what we're trying to do here, as it says on the second bullet point, like model rules that helps sellers on those platforms to be tax compliant, hopefully in an easy digital way, so we can simplify that, but also makes the activities available to tax administrations where you can think ahead in terms of even pre-populated returns. There's many things that are possible. Certainly in some parts of the world that seem to be more advanced, and pre-populated tax returns, the engagement and the using of technology as part of the compliance process, and that's certainly a topic that's dear to the Forum on Tax Administration as a general proposition. The general reporting on these platforms would be to their country of residence. There would be an exchange part, I think, that would then happen, and so that everybody gets this information that needs that information. We are working on this right now. In fact, we had a consultation. We're grateful for all the contributions that we have received from businesses, from other stakeholders. So I think that work is moving ahead quite quickly. And we plan to have, as it says here, the model rules expected to release before the summer. And the idea really is that we do see a space of a win-win, often said, not so often true, but here we can clearly see that that could be something good for tax administration, good for taxpayers, and good for platforms. Then the next point, I think a different topic also in the broader tax transparency space is tax transparency for crypto. It's a bit crypto to refer crypto to crypto, but what do we mean? FinTech is evolving rapidly, in particular in cryptocurrencies and the stablecoin space. And I think, you know, to the extent that they become an alternative to traditional financial products, it raises also the question of how we ensure adequate tax transparency in this space. As you know, we have tax transparency with respect to financial accounts, and Zaida has taken you through where we are in some of that space. But there is a question of how we make sure that those new services and products don't rest outside, don't sit outside the tax transparency space. So how do we bring them in back into that? And that also is work that is now proceeding on a fast pace, and it recognizes and builds on some of the changes that have recently also been addressed in the FATF, some of the building blocks on which this builds, including also, of course, the CRS. So that, I think, is the second part, gig economy one, crypto and fintech here in that space, and making sure we have tax transparency here as well is the second part. Give it back to Pascal, I think.
Well, I mean, it's ping pong because I will give it back to you immediately to talk about 13 and 14. However, one element on what you've just described, these are important deliverables for the G20 by the end of the year. There is a lot of interest, crypto assets from all countries, and renewed interest from the US, which is leading a new and strengthened approach on that point. So the agenda of transparency is going on. Zaida described what is happening in the global forum, and in spite of the difficulties of virtual meeting, very good progress on that front for the assessment of automatic exchange of information and all that. But also we are making great progress in developing new standards. But there is, beyond transparency and tax policy, the work of the BEPS implementation. We wanted to highlight 2 out of many other actions. So 13 and 14, Arin, back to you.
Thank you, Pascal. Yes, very briefly, in light of the time, I'll talk a little bit about Action 13 and a little bit about Action 14. 13, country by country reporting. You know that in the Action 13 minimum standard, there's a mandate for a review of the minimum standard by 2020. We are in 2020, so as you would expect, we're now reviewing it, and you know that because there's a public consultation document that was released in early February for public comment. We had originally scheduled then a consultation for March, but had to reschedule because of COVID. It's now rescheduled, as you probably know, for 12-13 May, pretty soon. It will, of course, have to be a digital meeting. We had about 80 responses. As it says, from M&E groups, from advisors, from NGOs, and the comments range across a wide spectrum. I don't have the time to go through, so tune in for the public consultation if you're interested in the topic. I should say that the focus is, of course, within the context mainly of this, of making it better as a risk assessment tool for high-level risk assessment of BEPS-related risk transfer pricing and economic statistical analysis. We have taken the soundings from businesses, advisors, also NGOs, but of course also tax administrations as the users. What can we do? And we recognize, of course, that for some it's a bit early stages because it does take some time until the information filters through. Nevertheless, I think there's a useful stock-taking exercise that we can do to improve the focus and the use of the information, streamline and see what changes are necessary. And the last point on this one, of course, as we will come back to when we talk about digital, it may be that aspects of this might also be relevant for the digital project, whether it's Pillar 1 or Pillar 2. And certainly as that evolves, we may come back and think about what, if any, changes on Action 13 might be needed. Noting, of course, that Action 13 has a specific purpose and an appropriate use restriction for high-level risk assessment. And if you wanted to use this information for something else rather than high-level risk assessment, we would need to think about the framework within which we can do that. And then next and last is Action 14. There's also a 2020 review. There's a bullet point here that says state of play in MAP, which allows me to talk as much as I want or as little. Given the time, I'll probably do relatively little, other than to say that, it depends a bit who you talk to. The glass is half full, half empty. I think we've made great progress in improving, and we also hear this from business, from where we were and where we are now, but still issues remain outstanding. We do resolve those that get into MAP a significant number with a full or partial alleviation of double taxation, but the countries are different. Not everything gets in the pipeline that should get in the pipeline. Not everything that gets in the pipeline necessarily gets out of the pipeline in the way we want. So there is a sense that more work is needed in this space. In the 2020 review, we have ongoing discussions in the working parties on the standard itself and whether changes are needed to the standard, the methodology of how we carry on the peer review, and then finally also the statistics framework, what gets counted, what gets measured, gets done, and do we need to make some improvements? I don't have the time to go through some of the ideas that we have and on the discussion, but we're happy to follow up if there are questions later on. And also with the possibility, and this is a time for input, of a public consultation later in the year, so that we've done the comprehensive exercise about where are we on the MAP process, so that we're sure that at least we have considered all the aspects and the stakeholders before we make decisions on what to change and what not. And then finally, of course, similarly here, as you know, in the digital part, tax certainty is an extremely important component of any consensus. And also here, as I said, while differently, there is a link a bit between the Action 13 and the information that may be necessary and the tax certainty agenda, which is a key building block of digital, and we are aware of the linkages here as well. I'm probably at the risk of playing ping pong again. I think I might give it back to Pascal after this one here.
Thank you, Arim. No ping pong, as I will now turn to Ben to update on the work with developing countries, which is core to our work. So that's not just lip service, or by the way, let's not forget about developing countries, but this work now is absolutely core given the membership, 137 members, and I think that echoes also what Zaida said with 161 members for the Global Forum. Ben, if you can go through that in a few minutes so that, and we'll be taking more than 1 hour, apologies for those of you who have booked another appointment at the end of the hour sharp. So we'll go through these, and then we'll go back to the work on digital that I know many of you are interested. So just a few minutes for Ben, and then beyond the hour, we'll take 5 minutes to brief you on the digital economy, and then take Q&A. Ben, up to you.
Thanks, Pascal. An update on 4 areas of work with developing countries. The first, as Pascal says, is about the 137 members of the Inclusive Framework and how they're getting on BEPS implementation. The majority of these countries are now developing countries, and we're devoting a great deal of effort into helping them. And you can see on the screen some of the areas where they're making good progress. 50 regimes in developing countries abolished or amended. 28 developing countries have signed up to the MLI, and Akim has already mentioned 13 and 14. Just noteworthy here is that the demand for most of our work is actually on the non-minimum standards, on transfer pricing and on limitation of interest, and that's where we've been making good progress over the last few years. So pre-COVID-19, we had been doing a great deal of work on outreach, on consultation, both on BEPS implementation and on the digital work. Everything has changed, and just about everything we're doing now has gone virtual. So we're doing e-induction work, we're doing virtual consultations, we're doing e-classrooms, e-technical assistance, and even e-audit, which I'll come on to in a second. Next slide, please. So secondly, Tax Inspectors Without Borders. This is our special project to help countries with audit assistance. It's unusual because we provide experts who work on real-time audits on real cases, and you can see some of the gains we've made in terms of revenue, $530 million US to date. We're expanding rapidly. We're using more and more south-to-south partnerships, and we're going into new exciting areas, including on tax and crime and on how to make effective use of AEOI information shared. We've just completed a stock take to give ourselves a health check before we expanded into these other areas, and results will be available on the TIWB website soon. Operations have not stopped. We're investing a great deal in remote technology, and we're hoping to bring out a secure platform so that data can be shared confidentially between tax administrations. And we're hoping to get sign-off on that from our board, which meets tomorrow. Next slide, please. So just a quick word about the platform for collaboration on tax. This is our partnership to ensure coherence with our partners, the UN, the World Bank, and the IMF. We're very pleased that a new website has been launched. And if you keep going through, Sonia, you can see there that all the assistance provided by the 4 partners can be seen in one place. So this is going to help reduce duplication and ensure coherence, as I said. We just added a repository of all of the efforts made by the 4 partners on COVID, and that is updated on a daily basis. And then finally, our toolkits that we produce largely in support of BEPS measures or related international tax measures are up there, and the final version of the offshore transfers will be there soon. And we're taking those out virtually to be discussed and implemented with developing countries too. So lastly, let me bring your attention to a new report that we're working on. And this is about how we're working with developing countries across the board. The idea is we're taking everything that all of the work we do on tax and the OECD and working out how developing countries can benefit from all of it. So that includes participation and voice in the rule setting work, the expansion of data and statistics. So for example, how developing countries can join the revenue statistics work, unlocking expertise in the OECD countries that can be directed towards developing countries in all sorts of areas, including tax and crime. And lastly, on capacity building, where you've already heard we're making good progress. Back to you, Pascal.
Thank you so much, Ben, and invite you all to pay a lot of attention to this work, which is critical, especially as developing countries are now part to the standard setting. And we would like to thank them for this, to thank ATAF in particular in Africa, which is very much involved in the negotiation. We are moving to the digital economy, or the digitalization of the economy of the tax challenges. Next slide. And you will see that what we see today is a strengthened call for a solution. We've also seen some players, and 1 or 2 countries, no more than that, indicating that they would think more reasonable to delay the work by 1 year. You may have seen letters from US business groups, for instance. But what we've seen for the past 2 months are many countries telling us on the contrary that we should move not faster, but within the deadline. And the deadline, as you know, is year-end. So you can find on this slide the communique of the G20 in April, which underlined the need for a solution, but also the G7 chair's summary. As you know, the G7 is currently chaired by the US. So there is a risk, an increased risk, of a proliferation of digital service taxes. I mentioned 3 countries earlier thinking of moving into that direction, and the risk of trade conflicts, especially throughout these turbulences of the economy. And it's more than turbulences. We could even talk about a crash, unfortunately, would not do good. So an increased need for a consensus-based solution, but a challenge on the timing. And this is something which I think all of you will appreciate, will aim to stay within the timeline, which is by year-end, and year-end is December. And by then, we will try to advance this agenda. We initially planned to have a meeting of the inclusive framework in Berlin on 1st and 2nd July. Given the situation, the sanitary situation, the restrictions on movements, it is clear that the Berlin meeting will not take place. We will probably hold an inclusive framework meeting to take stock of where we are, to adopt a report on the implementation of BEPS, especially 5 years down the line after the adoption of the BEPS package, but we will not deliver the BEPS package in July. We will, however, plan a meeting, either physical or virtual. We cannot exclude that by October the situation will not be back to normal, but early October, the date is not yet fixed, but it will be before the G20 finance ministers meeting on the 15th and 16th of October. We will hold an inclusive framework meeting, physical in Berlin or virtual, and this inclusive framework meeting will adopt a package, or should adopt a package, or it is expected that it would adopt a package because it depends on the ability to reach a consensus. Next slide will be an update on the impact assessment. So we'll try to do in the next 2 or 3 remaining minutes is update on the impact assessment, update on Pillar 1, update on Pillar 2. As I indicated to you as a background, is there is strong appetite from the members to move. Many countries are indicating they want to adopt a DST. The US is very strong in saying if you move to a DST, we will take trade sanctions. So we need to square that circle and find a solution on Pillar 1. On Pillar 1, we have also Amount B, which is very important, and we've just talked about developing countries, and many of them, at least those not having transfer pricing rules, are extremely interested in Amount B, and working parties have made great progress, Working Party 6, in particular Working Party 6 on Amount B. So there is substance for a deal on Pillar 1, even though there are questions on the scope, obviously, and the focus may be on digital companies right now for many countries, especially as they look like ring fencing themselves, as some have said at the steering group meeting. And Pillar 2 is still here. There is no big impact, and we were faster to work on Pillar 2 in a sense because we didn't have these competing approaches. So that's the background against which we'll quickly present progress. On the impact assessment, we are moving ahead. In particular, the last delivery of update to the steering group last week included a modelization of trade war, what it would give, and the outcome of the discussion is that solution would be much better than no solution and unilateral measures. As regards the publicity of the findings, we are still frustrated. The members are very cautious. They don't want us to communicate on the outcome, and that's why this is still with the members. We hope that by the summer. By the end of the summer, we'll be able to communicate. We know it's frustrating for us too, but that's the sovereignty of the members. And finally, the team is trying to incorporate the COVID-19 crisis in the impact assessment. I stop here on the impact assessment, and we'll turn to the next slide, which is pillar 1 on the unified approach, amount A, amount B, and tax certainty, amount C if you want. On amount A, you see that we have broken this down into different elements: the scope, the nexus, the tax base, including the business line segmentation, the allocation of the elimination of double taxation, and also the implementation. With the same type of reasoning on the tax certainty, putting it in different building blocks, and in particular the dispute prevention and the dispute resolution for amount A, for amount B, and their articulation. So these are the building blocks on which we now have detailed technical notes, and all these notes are now with the working parties. What we aim at is making sure that at some point over the summer, this be shared with the members, members, it's already with them, but with the business community and with the civil society, so that we can get comments. So that's the state of play on pillar 1. Arim, on pillar 2, you may want to say a few words.
Yes, and I'm happy to say a lot of words about pillar 1 too, but I will not. Yes, so pillar 2, same design. See, kind of like, you know, the different components given the 60 seconds that we have. As Pascal has said, we're making a good technical progress on several of the questions. You see the breakdown here, the income inclusion rule, the under tax payment rule, which in their current design would be twins in some sense to simplify their application, and so that there aren't different rules that apply depending on which rules that applies. So you see that, you see there's threshold discussions, tax base, cover taxes, the question about blending, timing differences, and how we account for timing differences, and how this would be different in a jurisdictional model, where clearly they would be needed more so than perhaps even in certainly more so than in a global model, scope and carve-outs, and what carve-outs there are, the simplification, so that in some sense you make sure that this applies where it really needs to apply, but doesn't generate any more compliance costs than would be necessary to justify in the light also of the policy objective of the pillar itself. There's a switchover rule, there's a subject tax rule, and then you see also questions around rule coordination, sort of the rule order, the interaction with other rules. I think there's a clear understanding that, you know, we cannot go from a situation where maybe we have tax at below the minimum rate to tax where we would be taxing more than the economic profit, or where we would have double taxation. So we need to make sure that we don't flip from one to the other, and that's about the importance of rule coordination, where this would go, how this would be done, how we would assure tax certainty in this space as well, and then to sort of the status, and then of course below which you also see the question of the minimum rate. As Pascal has said, and much like in pillar 1, all of these issues are now being addressed in the different working parties, and we also seek to engage and reach out further with the wider stakeholder community as we move into the summer. I think that's it in a nutshell.
Thank you very much, Arim. Very, very quickly, other work and next steps, it's just for your calendar. You can see that in May, we'll have a public consultation on Action 13. Arim mentioned it, publication of Latin revenue statistics in Latin America and Caribbean with ECLAC, Joint Global Relation and Development Global Forum annual report for 2019. In June, we have further statistics. We have work for tax transparency in Africa, the annual report of tax inspectors without borders, the board of which will meet next week, and the peer review reports on Action 14. And in July, we'll have the annual progress report on BEPS implementation by the inclusive framework, with all this driving us to October with this deal. Q&As, we have already responded to a number of questions. I have tried in writing. There are many technical questions for the tax policy team as well as for Sophie. We'll pass them on to the team so that they can reply to you directly after this conference. And many, many questions, of course, on digital. with will you refocus on digital? What will the timeline be? So timeline, October. What will be delivered in October, we don't know yet. It's being negotiated and it's hard to predict. What we can see are tensions, are conflicts of views. We can see an emerging view on Pillar 1, Amount A, that it should focus on digital, but we know about the US position and the Chinese position in particular that it could not be ring-fenced to the digital economy. On the other hand, we can see that it's very important to stop trade wars, and these wars would result from actually measures targeted on the tech companies. So what can be done in this area? We will see. We are assessing it, and the members are currently discussing this. Shall we be able to deliver the full-fledged package in October? I think we need to be reasonable, and the reasonable expectation here is that we may have a staged process. I'm just speculating. We'll see what's happening in the negotiation, but I don't exclude that we would have a staged process and that some of the aspects would shift to 2021, for sure for the implementation, as has been the case since the beginning, but also maybe some aspects of the initial package, mainly on Pillar 1, even though there is a link, as many countries would say, between Pillar 1 and Pillar 2. So you can see that we're in the midst of the negotiation. It's too early to say what's going to happen, except that there is a shift to October, which is within the initial timeline, which was by year-end. I think we will stop here as we see the number of participants slightly diminishing because of the time, and we know that with our crazy Zoom lives now, we are obliged to move from one conference to another. So we apologize for having been over time. It's at least 10 minutes, 11 minutes over time. So apologies for this. We thank you very much. I would like to thank the participants, thank the audience, thank Hazel and Carrie and Sonia, who you may not see but contributed to this, and we'll try to do another one in not too long a distance, as I fear that we will not be able to see each other in person for a while still. Good luck, keep safe, stay home where there is a lockdown, enjoy the outdoors if there is no more lockdown, and hope to see you soon. Thank you. Bye-bye.